This video reviews Sumitomo Corporation's financial results for the second quarter of fiscal year 2025, covering the period from April to September 2025. Sumitomo Corporation is a major Japanese trading company and a member of the Sumitomo Group, which traces its roots back to the 17th century. It is one of the big five Sogo Shosha, general trading companies in Japan, alongside Mitsubishi, Mitsui, Itochu, and Marubeni. Sumitomo's profit for the first half was 301.2 billion yen, which represents an 18.6% increase from the same period in the previous year. The full-year profit forecast remains unchanged at 570 billion yen, with a progress rate of 53% toward that target. Sumitomo also mentions that the loss buffer, which was initially set at minus 40 billion yen at the start of the fiscal year, has been reduced to minus 20 billion yen. Regarding shareholder returns, Sumitomo maintains its annual dividend plan of 140 yen per share, consisting of an interim dividend of 70 yen. In addition, it has been conducting a share repurchase program worth 80 billion yen, of which approximately 24.1 billion yen had been repurchased by the end of September 2025. The net profit progress rate is 53%, including a 20 billion yen buffer. Overall, these are solid second quarter results. Sumitomo recorded a profit of 301.2 billion yen for the first half of FY2025, up 47.3 billion yen from the previous year, showing solid performance. Resource profits fell due to lower coal and iron ore prices, while non-resource profits rose, led by steady ship and real estate businesses, and digital profit increased due to the consolidation of Net1 Systems into SCSK. Although automotive and power profits declined, gains from selling Midas and other asset replacements supported earnings. A stronger yen slightly reduced overseas profits, but overall growth remained strong. Profit for the period by segment. Automotive increased significantly, mainly because of gains from selling Midas in the U.S., tire sales and marketing business, and SML Isuzu shares, despite tougher competition in key markets. Diverse urban development rose sharply due to the delivery of large-scale real estate projects. Media and digital improved thanks to higher profits at SCSK from integrating Net1 Systems and gains from selling Argo Graphics. Mineral resources fell due to lower coal and iron ore prices, though copper business profits rose. Energy transformation business decreased, as last year's asset sale gains were not repeated. Overall, profit growth was driven by strong results in automotive, real estate, and digital businesses, offsetting declines in mineral resources and energy transformation. Sumitomo is transforming its portfolio through major strategic investments, including the planned acquisition of a U.S. aircraft leasing company and a tender offer for SCSK. It is also streamlining operations by selling low-performing assets such as Tigaya, Midas in the U.S., and its North American melon business. The digital and AI strategy is being accelerated through the full acquisition of SCSK, which is expected to strengthen Sumitomo's position in digital transformation and IT solutions. SCSK is Sumitomo Corporation's IT services subsidiary that provides system integration, cloud, and digital transformation solutions. Sumitomo is working to strengthen its driving force for growth through group reorganization and synergy creation. FY2025 forecast for profit. Sumitomo's full-year profit forecast remains unchanged at 570 billion yen, but the internal composition of that forecast has been revised. The loss buffer, which was originally set at minus 40 billion yen, has been reduced to minus 20 billion yen, reflecting greater confidence in earnings stability. In the mineral resources segment, profit is expected to decrease by about 12 billion yen compared with the earlier forecast. This is mainly due to delays in new investments that were not carried out as planned. In the non-mineral resources segment, profit is forecast to decline by about 28 billion yen. Demand slowed in North American tubular products. Competition remains strong in automotive. The Ethiopian telecom business was hit by currency depreciation, and healthcare and chemicals saw weaker demand and delayed investments. However, these negative factors are partially offset by 20 billion yen in gains from asset replacement and extraordinary profits, including profits from several transactions such as property sales and portfolio restructuring. Overall, even with these mixed developments, Sumitomo maintains its full-year profit target of 570 billion yen, supported by steady performance in key businesses, disciplined asset management, and progress in the company's medium-term growth strategy. Sumitomo continues to pursue progressive dividend payments with a total payout ratio of 40% or higher, meaning that at least 40% of profits are returned to shareholders through dividends and share repurchases. For FY2025, the annual dividend is planned to be 140 yen per share, consisting of an interim dividend of 70 yen and a year-end dividend of 70 yen. This amount is unchanged from the initial forecast and reflects Sumitomo's commitment to stable and sustainable shareholder returns. Sumitomo is also buying back shares, completing about 24.1 billion yen of its 80 billion yen program announced in May 2025, which runs until March 2026. With a progressive dividend policy and share buybacks, shareholder returns are attractive. Stock price. This chart over the past year shows the stock price in Japanese yen at 4,486 yen as of October 31st. This chart shows the stock price in US dollars at 30.26 as of October 30. Sumitomo Corporation's share price is also on an upward trend, like other Japanese companies. However, earnings results may not have met market expectations, and the stock price fell about 3.6% today after the earnings announcement. Current PBR is 1.11 and PER is 9.5. Dividend yield is 3.11%. Compared to the past few years, the PBR, PER, and dividend yield indicate that the current stock price is relatively high. As a result of the steady rise in the stock price, it is now higher than in the past. Conclusion. Sumitomo Corporation's first half of FY2025 was overall good, achieving steady profit growth and maintaining its full-year forecast. While resource prices declined and some sectors faced slower demand and investment delays, stable performance in core businesses, gains from asset replacement, and progress in digital transformation through SCSK supported overall earnings. With continued share buybacks and a stable dividend plan, Sumitomo remains committed to sustainable growth and attractive shareholder returns.